In the 18 months between December 2022 and May 2024, the stock of Core & Main, a leading water infrastructure manufacturer based in St. Louis, Missouri, rose more than threefold. The price surged from under $19 to over $62 a share in a near straight line, interrupted only by a few shallow dips along the way. And just as it felt as if nothing can stop the bulls, C&M fell back down to $37 by September, losing as much as 40% in just 4 months. Core & Main has since returned to over $52.50. But can investors trust this recovery, or should they brace for another sell-off? Fortunately, the surge to over $62 didn't exactly move in a straight line. Instead, it produced a very interesting Elliott wave pattern, giving us a hint about the future. The sharp surge from under $19 was, of course, a 5-wave impulse. We've labeled it 1, 2, 3, 4, 5 in brackets, where wave 3 is still longer than 1, but the extended wave here is the 5th one. It is almost exactly 2.618 times longer than wave 3, and its 5 subwaves are also visible, marked 1, 2, 3, 4, 5. In this respect, the drop from $62 to $37 is the natural 3-wave correction, which follows every impulse. But does the current recovery stand for the resumption of the preceding uptrend then? We doubt it, for 2 main reasons. 1. Extended 5th waves are usually almost entirely erased by the following retracement. That's not the case here. And 2. Core & Main trades at a forward PE ratio of 21.5, which is expensive for a company with a mid-single-digit revenue growth rate. We therefore think that the drop to $37 was only the A wave of a bigger expanding flat correction, whose wave B is now in progress. It is supposed to evolve into another ABC zigzag structure, and waves A and B seem to be in place already. Once wave C completes wave B somewhere around the previous all-time high, it would be time for an impulsive sell-off in wave C in brackets. Downside targets close to the support near $32 would make sense once the bears return. This would bring Core & Main's multiple to a much more reasonable 12, assuming that analysts' fiscal 2026 earnings estimates remain unchanged.